Okay, so welcome everyone to a new episode of the Crypto Hour. Today is Friday, the 30th of January 2026. So let's start straight away from sharing my screen. Let's have a look. We don't want to look at that. Okay, let's look to the economic calendar first. Okay, so this week there's been quite a few things of notice. Obviously, we got inflation numbers for Australia, which went out quite sharply. So we got now for you guys in Australia now, the inflation is running at 3.8% yearly, which is quite a lot. Also, we had interest rate announcements in Canada and United States. Both of those happened on Wednesday and kept the rate at the current level. So it's 2.25% in Canada and 3.75 in the US. Yesterday we had the just about the unemployment claims in the US, pretty much, following expectations around the same level. And today we got producer price inflation coming a little bit later. But although there haven't been any, apart from the Wednesday announcements, there haven't been any major things going on in terms of macro events. But when we look at the markets, there has been some really unusual movements in price of several assets. So let's go and have a look at so let's have a look. So let me go to charts. So first of all, let's have a look at the stock market and how it has moved. So look here, the S&P 500. Go to a daily chart. So as you can see, nothing major from the activity of the S&P 500. As you can see, it actually made a new high on Wednesday after the interest rate announcement. But since then, it has we've had two negative sessions. Obviously, sorry, one negative session yesterday, and today, obviously, it's also down about 1%. But it's, in the great scheme of things, at the moment is still nothing to worry about so far. So we're still looking at the kind of movement in the chart. It looks like a simple correction. And obviously, at some stage, there might be like a deeper correction, but that hasn't really printed in the charts. So yes, there has been a move down yesterday, another move down today, but it's not kind of like panic move where you see where the markets lose 3, 4, 5% in one day. So nothing like that yet. But when we look at the dollar, so this is more interesting. So this is the dollar index. So you can see it reached a multi-year peak in 2000 and towards the end of 2022, and to get levels that were that high, we really need to go back to the early 2000s. So if I do it on a monthly basis, it would be easier to follow. This goes back all the way to the 1970s, all right? So so you can see, apart from the crisis of early 1980s, generally speaking, the dollar has been into like almost like a range between 80 and 100, roughly, as a general value. There have been some times that we spent outside of it, like in the early 2000 with the dot-com boom and bust. And then there was a period also here between, again, following the great financial crisis, 2007 to 2009. Pretty much the rest of the time has been into a sort of range. Now, what's happening obviously in 2022, towards the end of 2022, again, it hit another relative peak, then it's gone down until the end of the next year, and then it has gone back up until really the beginning of 2025. And it has since kind of lost quite a lot of value. Yeah, this last move at the moment is like 13% drop in the value of the dollar against a basket of currencies. So against the euro, the Australian dollar, the Swiss franc, etc., the UK pound, and whatever. So really, when the dollar moves down, then any assets that are denominated in dollars they are not printable, obviously move up. And there is a lot of talk in the investment in this industry about the dollar debasement. They are trying to kind of artificially devalue the dollar, so to make their industry more competitive, because then their products can be sold for less foreign currency, and so make the US more competitive again. And as a result of this, so one of the things where this is more obvious is in the move in gold and silver. So especially silver, there is almost like it's a smaller market, so where the moves are even more violent. But this is like gold, and what we're looking at before we're saying from January 2025, as the dollar started going down, what's happened to gold? So this is where we were in January 2025. Yeah. And this is where we are right now. So like a 93% increase in the price of gold following a 13%, where is that? January, at the moment you got an 11% drop in the value of the dollar. Okay, so we're seeing the effect of it is not only that this move it hasn't been what do you call a retail move. It's been pretty much like driven by central banks. Okay, so central banks have basically they are accumulated again gold in their reserves, and literally substituting some of the bonds that they have in their reserves with gold mainly, and also silver, but mainly gold for central bank reserves. But we are now got into the first time in many years that banks have got more gold than bonds in their reserves. Okay, so this has been like a process that has carried on for a number of years now. And you can see here from literally from 2022, the gold has been on a pretty much, as you can see, all the way from January last year. There's only been 1 month when price slightly declined. Every other month was a positive month. So it's not it's something that's quite unusual for any assets. Now, and so the same thing can be seen in here in silver is even more pronounced. So here from January 2025, this is 250% increase in the price of silver. Okay, and that's down to many different factors, and also down to can be down to constraints into the availability of silver on the markets, and some of the big positions that were of some of the big banks that were shorting silver quite heavily, and they had to kind of like cover their positions because they were warned by the markets that the actual market authority that the position was too large and was impeding the normal functioning of the markets, so they almost like forced them to reduce the future positions. So this is all seen in the same environment. And now if we go and look at Bitcoin, the picture is slightly different. Obviously, we're seeing that a lot of the increases come from literally for the end of 2022 all the way up to kind of like the middle of next year, and then there's been kind of this quite heavy correction that we're still sitting on. But as you see on the long-term trend, we are still in a so far until we move below this point, we are still on a technical uptrend. Obviously, now we get to the point where we are in a worrying phase, because if we were to have another move down, moving below the $75,000 level, we might then hit a wave of liquidations that would push the price quite a lot lower. For me, when I look at possible kind of backstops, I then look at on-chain and look at the average price paid for Bitcoins, and now is climbing every month. But if I look at CryptoQuant, let me just bring it up. Sorry, let me just. Okay, so if we see now the realized price for Bitcoin, it sits at about $56,000. Okay, so this is the average price at which every Bitcoin in circulation was last transacted at. Okay, so in a way, I consider this a sort of like a backstop to where could we stop pretty much in a bear market. And if we see the previous bear market, this is pretty much within a range of that level is where we basically bottomed out, and then prices started growing again. So from here, when we look at the price, that would take us down at the moment to around this level here. Okay, which is pretty much like we would be touching onto the previous highs of the previous cycle. So if we see here, let me just bring another line. So if you see this here, the bottom of the previous cycle, can you see that is where the previous cycle, the 2017 cycle, basically topped out. And if we were to get back to this sort of level, to around the 56,000, then we pretty much will be in the same situation that we were in 2022. So we're not looking at the immediate cycle behind, but we're looking at the previous one. So really, this idea between 55 and 65, it could be where we bottom out during this cycle before we start growing again. Now, I don't think that we are at that point now. I don't think that we're going to get there now, personally, because there is a lot of liquidity that is being injected into the markets. But it is one possibility that we need to be aware of. I've seen, you see this yellow box here. I basically have drawn this box. We are saying up to now, it's almost like you can see this is the lowest price that any weekly candle has closed at. Because maybe yes, it's gone lower, but then it's always gone back to this range. And this could be the first time that we actually abandoning this range. And then the next question is, okay, if we're now moving down, where are we going to stop? We still at the moment, all the time that we are in this range, this is still the, what's it called, the boss. This is what rules the current price at the moment. But if we were to close below this, then we will then move to the next level of supply down that definitely wouldn't come before the 68,000-69,000. So that would be the next place where I thought there's a chance that we might pause, maybe turn around, maybe not. But that would be the last place where the next place where I look at. So it's not a pretty figure at the moment. But the one thing I can say though about Bitcoin is that although with all these things that are going around, is not I mean, the movements that we have seen, although the price is quite low at the moment, is at around 82,000. We're not seeing panic in the markets to get us to that point. It's been kind of like almost like disinterest, if anything else, rather than a kind of panic moves that drop the price down quite violently. It's been kind of like a gradual decline, like if you see here. Apart from this last couple of days, have been a little bit more, stronger. But generally speaking, you see that it's been sideways trend for several, all the way from November last year, and we're still within that range because the low point was hit at about 80,000 and a half in November. We still haven't gone beyond that point. So this is the wide version of that range, which is quite a wide area between 80,000 and almost 98,000. Okay, so we're still in that range. What is going to happen next? It's kind of remains to be seen. There is like a sort of like from one side we're getting now an injection of cash. Now there is to be said that kind of gold and silver are reacted in almost in an opposite way to Bitcoin, almost like there is like a negative correlation between the price of gold and the price of Bitcoin. It's like when gold goes up, Bitcoin goes down. When gold goes down, Bitcoin goes up slightly. So it's it comes, there are good ways of thinking that the price is being kept artificially around this level, and it'd be interesting to see what happens today, because today there is kind of there is an option. There's lots of option expiring today that kept price between the the 80 to 88,000 dollar mark. You can see here that every time the price got to about around 90,000, it got pushed down again, and every time the price got down to roughly about 85,000, again it got pushed up again. So there's a battle between the two the two kind of bears and bulls in the option market as well, and we could see kind of like an opposite move today maybe, or it could be a continuation of the same move. But it is quite an important day today to give us an indication of what's going to happen next, because today they're going basically to reset the board for the next month's speculation. So once today's contracts are closed, then we'll be okay. What do we do for next month? Are we going long? Are we going short? And that normally has an effect. Although it's a derivative product, it has an effect on the spot price as well. So this going forward, what is going to happen to to the dollar? So that's the main question that we got to ask. And one interesting way to look at it is, let me just get rid of all this at the moment. Move all the drawings. And if I place Bitcoin on this chart as well, go to weekly charts maybe. So is there? No, it doesn't work on this. I mean, the scales are not just too different. Let's get rid of it. Okay, but if we look at these, so when are the periods when the dollar had a significant decline for a period? Can you see a 15% drop? That was between 2017 to 2018. Around a 13.5% drop between 2020 and 2021. Actually, you could consider it almost like what happened in May 2021. Anybody remember?
Was the
No,
pandemic?
no, it's yeah, no, for the point of view of investment.
Did the altcoin collapse? The
No, so this is
FTX?
yeah, this is the previous Bitcoin top, April, May 2021, and then there was a short period in November when it did the same thing, and then it started going down. You can see how the things combine here at the same time. And the other thing to be noticed is all the time that the dollar index really moved below a value of, I would say, significantly moved below a value where we are now, around roughly around 96. Can you see this is most of the time price has been about that point, like 90, 94 and a half, 95. But in the past few years, the only period when we have really been below that point is when Bitcoin boomed. So the thing is that this is where as we get more dollars being printed, Bitcoin is very sensitive to changes in liquidity. And so if we see that we get a move from where we are right now and carry on moving down, as it looks like at the moment, the chart of the dollar index looks very bearish. Okay, we're in a long-term downtrend, and we just made a new low. Okay, so we haven't closed at a lower point yet, but this is what we're seeing right now is this. So this is the long-term move. So we are now right at the lowest point that we've been in the past 3 years. So if we carry on and the dollar moves lower, then we are looking at basically pretty much everything that is priced in dollars, to then appreciate significantly. So, and that could be commodities, it could be gold and silver, it could be other currencies, it could be Bitcoin, and also where Bitcoin goes, then the other cryptos follow as well. Okay, so this is my kind of, in a way, my prediction. And we're still going to see because I can see gold and silver there's being constantly the dollar is being politically devalued because President Trump has been talking openly that he wants a weaker dollar to give back strength to the American economy. Okay, and also there has been all this talk about firing the chairman of the Fed, because he's not lowering interest rates enough. So what happens when the interest rates go down? Obviously, the bonds on the dollar pay less, and so the dollar value goes down. Because it's not as investable. Obviously, you don't get as much, for just holding dollars. So if this continues, then we're still expecting big move in the stocks and shares, in cryptos and everything else, and in metals as well. Everything else that is denominated in dollars. Okay, so that's kind of like the way that I see this. Then if it's going to happen or not, remains to be seen. But at the moment, looking at the data, it's where we are. It's where we seem to be going. Now today there is, so you can see the dollar index dropped a lot on Tuesday, and now it's recovered slightly, but it's still negative for the week. So this is where the week started at 97, and still we're still below that at the moment. But we can see a direct relationship between the value of the dollar and the value of gold and silver as well. When there is panic, this is where gold and silver really appreciated a lot when the dollar index was going down. And this is now that the the value of the dollar is going up, we're seeing a correction in the price of gold and silver. Now, the other thing that was worth noticing Okay, this is what I wanted to show you because it's quite remarkable. Is this? Okay, now this move here, which happened in 1445, 1525, so less than an hour. Okay, about 40 minutes, represents almost the GDP for 1 year for the whole of Europe. It's unbelievable, unbelievable. And so these kind of things don't happen by chance. Okay, there is like a concerted effort, because what happens if the price of gold carries on going up like this, you know, day after day after day, growing by 3, 4, 5% a day, it causes a lot of problem for normal investments, something like stocks and shares and bonds and other things. Who wants to buy anything else when you can buy something that is as safe as gold or silver and make these incredible returns? You know, with this drop now, almost brought back, you know, it brought back the price of gold and silver more to a still a big increase from beginning of the year, but it's more, probably they want to have a reading at the end of the month is not as positive as positive for gold, because we're going up from where we are right now. Even after the big drop that we are today, we're up 17% on the month. This is gold. You know, silver is even worse. Look at today, by the way. This is like almost like 12% drop today. Unbelievable. But still, 31st of December, there we are. Even after this drop, silver has gone up 40% this month. I'm not talking, you know, so what I say, year to date, yes, from in 2026, so really, you know, less than a month, has gone up 40%, simply because it's, you know, we're measuring now, but at the top, it was almost like 70%. It's insane, honestly insane. And it'd be interesting. There are now, you know, talks going on online. I think who's talking silver up, and you know who's behind it. Who's, you know, kind of like your guess is as good as mine. But obviously, when gold and silver are moving like this, it doesn't happen very often in history. You know, so if we go back and, you know, look at silver, it happened. Why do I have this? Sorry, let me just look at another chart. Maybe longer chart. Okay, so in history, there are many times that silver has appreciated this quickly. So it happened in the late, you know, 2006, 2005 to 2008, 9. So just the area just before the great financial crisis. And then here in 2010 to 2011. And again, during the pandemic. Apart from that, as you can see, all the other time it's just been pretty boring. Pretty boring, really. And it's taken all the way from 2011 to 2025 before we actually created a new high. So if you bought silver in 2011, you would have been sitting on it for 15 years before seeing any returns. Okay, so it's not necessarily a, you know, an investment asset so much as, you know, silver is an industrial asset, but gold and silver in general are protection for your investments. And when people are worried that their money is not safe in the banks, what do? They take it out and buy something else with it, because they know that holding cash in their hands means that, you know, their purchasing power is going down every day. You know, so that's like kind of like a lesson for all of us. it's understanding, you know, the slides I showed you last week, in the sense that the dollar, at least the US dollar, has been losing value at a rate of 6.6% a year, every year. So just think about it, is that not only that, so it's to add insult to injury. If you invest money, first of all, you got to make at least 6.6% to just stand still. Okay, so that your money keeps the same value. Not only that, but on the money that you make, you're also taxed because you are earning, you know, you got an income of 6%. But what they don't tell you is that, you know, that income, that extra income that you've been taxed on, buys the same things that you could buy with it the previous year with less money. So how is that fair? That you're taxed on something that hasn't improved your situation. So you're doing the same thing that you were doing last year. You are consuming the same product, but you're being taxed more for the privilege. How is that fair? And so, you know, life is unfair, unfortunately. And the only people that can keep up with this are people that have assets, because assets are, generally speaking, are limited. Because of, you know, one characteristics of any asset is that, you know, there are more people that want it than people that own it, generally. Okay, so the scarcity. And so because and when you got something that doesn't increase a lot year after year, and on the other side you got money that's being pumped up at a rate of 6-7% a year, you can see this, that there's more money to buy the same things. So assets will always increase in price, where money, you know, at this present state with this financial system will not, because the amount of money in circulation grows and grows and grows every year. So the reality is that when people say the rich get richer and the poor get poorer, that is absolutely true. But it's true for one simple reason, that the top 10% of the population pretty much owns all the assets. And if you look at the bottom 50% of the American population owns 1% of the assets in the US. And the 10%, the top 10% owns 90%. So there's a little bit left for the middle classes, but not much. So you see what I mean. And by printing dollars, assets will go up in value, because, you know, because that's the market law. You know, on supply and demand, there's more supply of money. We've got the same number of houses go up in price. Same for gold, same for anything else that is scarce in value. So that's also the value proposition of Bitcoin too. It's limited in its issuance and its supply. So eventually, in time, when you're not worried about what happens next week or next month or the next 3 months, but if you hold it for a number of years, you know, the price of Bitcoin eventually will go up, as long as it's still relevant and people still want to use it. You know, we still carry on going up, because you can't really create any more Bitcoins more than have been, you know, they have been set up in the Bitcoin code. So we know that the maximum is going to be 21 million. When we reach that maximum, that's it. So if in 10 years' time there is double the amount of money that there is today, you know, Bitcoin will be at least worth, you know, with the same use it has today, will be worth twice as much. It's just, this is not because it's a fantastic thing. We're just like a game of numbers, you know. So this is what I wanted to kind of, in a way, focus and imprint on you a little bit today. Kind of look at things in a slightly different way, because the world is changing and we need to adapt. Yeah, we'll look. I'd say I don't have any articles or anything for you today, because I wanted really to focus on this and consider this more than anything else, because I think it's important for the overall outlook. I'm still thinking that we are at the moment, for the next couple of quarters at least, we are in the Goldilocks scenario. And just show you what it looks like. Sorry, just go back and find it. My Goldilocks slide. Okay, so I think we are in this scenario. Okay, we got accelerating growth on one side and easing monetary policy on the other side. So in this kind of quadrant, we got basically the everything rally. So the commodities, Bitcoin, the US small cap companies, but also emerging market equities and bonds, developed market outside of the US as well, and also credit. All these will tend to go up over the next 6 months until things shift and we move in a different direction. So that's for me kind of like the direction for me would be at least that I use myself. I try to be invested in assets rather than in cash. The only reason you might want to have cash in your hands is that to pick up some bargains when the markets start actually having a downturn, which would be a perfectly good strategy to have, but not quite now. Maybe 6 months down the line, 9 months down the line, maybe we might be in the situation where thinking, well, you know what, just get cash. Just we might be in this situation here, and we got like a decelerating growth, and then the inflation maybe has gone up and it started tightening again, and then they can just sit in cash, wait for disaster to happen, for things to crash, and then buy them at a bargain when everybody else is panicking. I say at the moment we're not there yet. So let me just stop sharing. And let's have a discussion. See, anybody else wants to contribute or ask any questions? Eric, go ahead.
Question about America, the US. I have learned they have to pay back a lot of interest this year. Do you know when that will be, or is it just during the year? Or is there the time it's like April or May or June or December when they have to pay their interests?
Sorry, what do you mean the interest?
America's got $34 trillion in debt, and they have to have a lot of money to pay the interest.
Yeah.
Is that just the whole time, or is that at a specific date?
No, it's also they got expiries like every month. So because every month, so what happens with bonds? Obviously, this is how they finance their debt, by selling bonds, treasuries, and each month when you got one that expires, then you just issue another one to replace it. Then obviously they got to pay interest on top as well, so that number is always growing because they are spending. Apart from the fact they got to a point where they pay more than $1 trillion of interest every year, interest alone. So obviously their debt is growing, and also on top of that, as an economy, as a country, the US spends more money than what they get in taxes. So then they add, how do they do that? Basically, they're spending on their credit card in a way. They do that by printing money. And long term, obviously, there's always a reckoning of some sort. The problem is that when somebody like the US actually goes down, it gets into like a situation like that. Who is there to pick up the pieces? Because every country in the world holds, US assets. Your pension plan, if you have a pension plan, will have US assets in it. So it's the kind of thing that affects everybody, not just the US. But we might be in a situation also where, we have just a US-centered crisis where the dollar really decouples, and other places around the world will be able to cope a lot better than the US. At the moment, it's like an open canvas, really, because it's not something that you can see that happened in this way in the past. So it's kind of new territory in a way. Yep. Okay. Aaron, go ahead.
Just a question: if you're holding Bitcoin, and I remember that was stuck on my wallet, and issues are thinking about when it was above 90. I always keep thinking to myself, would you sell a proportion of it, thinking, hedging about the fact that it's going to potentially drop down and you can buy back at a cheaper price rather than just sit and ride this wave? I mean,
yeah,
I'm
it's
not sure.
difficult. It's difficult to say because I'm really waiting. So there are a couple of drivers at the moment that can be affecting the price of Bitcoin, and one of them is the the case with the MicroStrategy that again would be decided in February. Now, if they delay again or something like that happens, then there's gonna be like a relief rally for Bitcoin. If MicroStrategy then is taken out of the funds, then that would have a negative effect that could push Bitcoin's price down. But which one will it be? It's difficult to say. The fundamentals for Bitcoin haven't changed. The fact that there is a lot of money that's being printed at the moment hasn't changed. So what's going to happen from now on? It's your guess is as good as mine. But long term, the situation is still the same.
What do you think the reason for? Do you think that's the reason for the sort of, in a sense, the decoupling from? I would have expected it to perform in the same way as gold and silver over the last month, and yet for some reason it's clearly not doing that.
I personally feel that there are lots of big players. They have a vested interest in getting the price of Bitcoin down because they are preparing products for whom they have to have, which they have to have Bitcoin, and so they want to acquire Bitcoin at a discount. So it's in their interest to try and stop. And there are like sometimes there are like strange action that you see. Really, there's some price levels that are really being defended, almost like they don't want price to rise above a certain point. And it's almost like they're trying to get the weak hands, to sell their Bitcoin so that they can collect them at this price before then they let price discovery happen. Because when that happens, then it won't take very long for Bitcoin to get to a new high and so on and get to the price where it should be. Because now the difference is that there is a lot of Bitcoin now that is being held in accounts that don't move very much. Like, for example, the ETFs and in retirement accounts and in investment accounts. There are some companies that now have Bitcoin as part of their treasury. They got investment companies that started allocating part of the capital to Bitcoin. There's only a limited number of them eventually. So those kind of allocation haven't changed. There may be some players that are waiting to deploy, but they're still there. This all the work behind the scenes, is still going on. So there is still got an economy, a Bitcoin-based economy that is basically being planned right now. Bitcoin at the moment, it looks like it's going to be underpinning a lot of the things that have been done in a different way. So there are talks about taking the stock market on the blockchain to allow for 24-hour trading of stocks and shares and bonds as well. Tokenized bonds are now they're starting to appear on the market in bigger and bigger quantities, and so the technology is there to stay. As an investor, when you're thinking about what do I do with my Bitcoin, do I want to just have it in my long-term portfolio, or do I want to try and use the volatility to get a little bit more? That's your choice. That's your choice to do, and also you got to look at your tax situation as well, because every time you move a crypto asset, it's a taxable event. So if you bought Bitcoin at 20,000, for example, and you sold it now, then you have to pay the tax on that. Even if you might be in the position where you sell your Bitcoin, you want to buy it back at a lower price, but you're able to buy a lesser amount of Bitcoin because you had to pay the tax, capital gain.
That's a good point.
So yeah, there are considerations to have, and it's easier if you start from a cash position and let's say, well, I buy some, sell some, I buy some and sell some, and you can do that and try and follow the market a little bit. But if you got a chunk of value accumulated, represented by Bitcoin, you need to consider tax as well.
Okay, so in some ways, it's good to just leave that as potentially as a chunk, as a long-term investment, and then, if you want to play the volatility, use cash to just come in and play a little bit in that sense. Okay.
Yeah, no, exactly that. Or what people do sometimes, when they want to access their Bitcoin, they kind of just borrow a little part of it.
Yeah.
So they can access to that cash. You know, and once it's so you could borrow, let's say, 10%, a 10% loan to value in Bitcoin at a very low rate. Okay. Then so at the moment Bitcoin is at whatever 80,000. You use that cash, you spend it, whatever, it's not taxable because it's a loan. Okay, then when Bitcoin doubles in price, maybe, you know, you sell a little chunk of your Bitcoin and you pay back the loan. And you still got more money than you had when you took the loan out. So, and those are
Tell
like
me how you do.
tax
How do you do
efficient
that? What was
strategies.
that?
Sorry?
Just say that again.
Yeah, you use your basically that's what a lot of people they have accumulated Bitcoin during time. They don't want to sell it because of the tax liability. So they just use it as collateral to get a loan out.
And a loan, okay.
You know, and then potentially because the loan is also a very, very low rate, you could eventually, if you want, if you invested that money in something else, you can just with the income that you get from the investment, you could repay the loan in a way, and the rest of it you just use for your own whatever you like.
Who is the loan with, Luca? Like who issues the loan?
So it depends. There are now even, you know, in the normal economy they're starting to do that, but you can do it on chain. So there are like so you can basically you put your Bitcoin in a smart contract as a collateral, and then you can take a percentage of the value of Bitcoin out as a loan. And the higher the percentage you take, the more expensive the loan is. But if you take a small percentage, it's fairly cheap.
And then because that's borrowed money, as you say, it's deductible.
Well, no, it's not taxed because he's not
Mm.
earning. It's not an earning, just like it's a loan. They needs to be repaid.
Mm-hmm.
So it's not taxable money.
And the interest that you pay on that loan would potentially be a deduction
Yeah.
against the asset.
Yeah.
And then, as you say, as the asset appreciates, you can just pay the loan off and clear the debt,
Yeah.
which was a tax-free loan, and you've just got the difference left over, but you're in a better position. That's your point.
Yeah, exactly. So you can still use the cash, some of the value they've accumulated, but not without selling any of your Bitcoin. Because if you know that every year that appreciates by, I don't know, on average 30-40%, then obviously the point is you kept it for, let's say, for a couple of years, and that is pretty much doubled in price. So you only need to sell a little portion of your Bitcoin to pay the loan back.
Mm. Hey, Aaron, why don't you leverage your Bitcoin and buy more Bitcoin when it drops, and then when it goes up,
Exactly. That's what it sounds like.
That's
He's telling you not to sell the Bitcoin, mate. He's holding
That's what a lot of people do. That's what a lot of people have done. Exactly that. So they borrow, and then with the money they borrow, they buy more Bitcoin, and then they use that Bitcoin as collateral. They borrow more, and they buy more Bitcoin with it. But that is though is leveraging, and then you might get to a point.
Isn't that literally what MicroStrategy's doing? Isn't that how they play it? That they loan against their Bitcoin pool to buy more Bitcoin?
No,
Or
so
they
what
borrow
MicroStrategy are doing now, they're actually raising capital. So they're raising capital through preferred stocks. So like so they pay something like about 10% a year to these preferred stock holders. And with what they raise in capital, they buy Bitcoin. But then their position then is safer because they're not borrowing money. So the worst that can happen is that, well, they stop paying the dividends to the preferred stockholder because they're not, they don't have any collateral. They just they own the company stock, but they are preferred shares, so they don't have voting powers and anything. But it's a clever way of getting a very strong position because then it's your stock, so you can be forced to sell your Bitcoin, because it just means that if you're a stockholder, that your shares are worth less. But it doesn't mean that you get liquidated because you're borrowing money and they want that money to be repaid. They got a right to keep that loan for as long as they want, as in the form of a preferred share. So they invest in their capital instead of investing loans, and they change their capital structure like that. So they used a lot of these because now they can attract all these funding to repay the loan. So their position now, they got a lot more capital and a lot less loans than they had a few years ago. So they're in a much better position to absorb any drop. You know, so if Bitcoin was to drop to 50,000, 40,000, it'd still be okay.
Glorious.
Yeah, it's a good, the clever financial games that they're playing. Quite interesting. Quite interesting to watch.
What do you think is going to happen to gold and silver today? Continue down or?
Anyway, guys, we come almost to 10 o'clock, so we got time maybe for another question, and then we'll have to say goodbye for another week. And just remind you again, Jonathan, if you don't mind posting the link to your Jonathan Wiz does a Cardano based session after this. So if you want to find out what happens on a real blockchain, I will highly recommend it.
I think you missed Aaron's question. He was asking what you think will happen with gold and silver today.
What would happen? I don't know. It's just like it's dropping like a stone at the moment. So, but again, it doesn't look like a normal market move. It's almost like they're trying to push. Today is the last day of the month. It's almost like they try to get a lower close for the month, you know, so that they, for some reason, obviously they're going to have some, you know, some expiring options are going to be really expensive to pay out if the price is above a certain level. So this is probably what they're looking at. But yeah, I got no idea who's driving those markets at the moment. It's, you know, the funny things to see is that the price of gold and silver, there's been hardly any small investor driver. If you look at the ETFs, they've actually gone down in assets under management over the past 2 years. Which doesn't make sense. So that's telling you that basically just like literally is like central banks and big players, they are playing that game. So which one is it they are trying to push the price down? Yeah, you can guess. If you do a search, you find out there's a certain particular bank that has large short positions, especially in silver, and they have to cover them. So it might be trying to get another month of time to, you know, because there's a lot of billions that they need to go back and buy silver to close their position. So there's all the fun and games at the moment, you know.
You said that the move was the same as the GDP of Europe.
It was like a UK and a couple of other. It's like several $1 trillion in about half an hour.
That's insane.
So that was that move of the gold that we saw on the chart. It's more than the value of the whole Bitcoin blockchain. The change in value. It was over $3 trillion.
Yes. Big boy games.
Yeah, exactly.
Boy games, yes.
So we'll see what happens. Let's follow it.
I wouldn't want to be the one responsible for pushing the green button instead of the red button.
I slipped.
Imagine if you hit the wrong one, made the wrong call instead of a put or whatever.
I know. All right, guys. So I will see you again next week. Have a fantastic weekend, and you know, be safe. Enjoy the sunshine if you have any, or otherwise, you know, try to manufacture some if you're in England. Okay.
And don't panic.
And I'll see you next week.